Hi, this is Beck. As you can imagine, we get all sorts of weird and wonderful stories when we have clients come in to get their tax returns done at the end of the financial year. And today I'm going to talk to you about a client who had the misfortune of having her investment property catch on fire a couple of years ago. The house wasn't destroyed, but there was a big hole in the roof. And she made a claim on her insurance and they paid out quite a substantial amount of money. So she was quite happy with that, as you can imagine, until it came time for her to come in and do her tax return. And at that point we had to give her the sad news that the insurance proceeds that she received were actually taxable income for her and needed to be included in her tax return. Now, she hadn't spent any of that money on repairs to the property, so there was no deductions that we could claim against that big payout that she had to show as income. So it was quite unfortunate, and she ended up with quite a large tax bill as a result of receiving that money. She also went on to sell the house, and because she hadn't undertaken any repairs, then she got a much lower value than she would have. So she had a smaller capital gains tax bill, but she did have a tax bill in relation to the insurance proceeds, which unfortunately she had no idea about. And it's always a good idea to please give us a call when something like this happens out of the ordinary, and let us run through what your options are, because this client would have had some options, but we weren't able to discuss them with her because we didn't even know about it until after the financial year had ended. So bit of a sad story, but one to make sure that you're aware of so that it doesn't happen to you or anyone that you know. Thanks, have a great day.